What's going on, guys? Thank you for tuning into this episode of Twin Finance. My name is Dylan, and today we're going to be talking about real estate investing and specifically why it's pretty hard to beat real estate investing and why it has so many pros. So what I'm going to do is I'm going to run through 3 scenarios that are going to show you a little bit why real estate investing is really a good option. For people that, maybe you don't like the stock market so much, or that's just not kind of you, or you want to do both, or, really it's just a good option for anyone. So the first scenario, but all 3 scenarios, we're going to assume the home, just for number's sake, in this case is $200,000. So the home you're going to be buying and renting out is $200,000, just for number's sake, guys. Also, the person is in a 30% tax bracket. The owner is in a 30% tax bracket. Just for number's sake, guys. You might not get that right away, but I'll explain it in a little bit. So yeah, that's what we're gonna assume. We're also gonna assume rent per month is about like 15. Like we'll go with for number's sake, we'll just do $1,600. All right. 30% tax bracket. The home's this. So yeah. So scenario number one. So the first ways you can go about, obviously, real estate investing, guys, you can buy duplexes, fourplexes and whatnot, apartment buildings. But for this example, I'm just going to keep it simple. We're just going to talk about one building, one renter. You're just going to be renting to one person. It's not even like you're renting basement and upstairs. You're just going to be renting the whole house, one person. And yeah, so that's where we're going to get into it. So the home's $200,000, but in this example, we're going to pay for the home cash, full cash. So let's say, someone's been banking a lot of money throughout their life, and then they have $200,000 saved up, and they're wondering, what should I do with it? So in this scenario, they put $200,000 and they bought a rental property cash. Let's say it didn't need any renovations or anything. The home's just good, guys. It's fully furnished, ready to rent. That's the scenario. It's an ideal scenario. $200,000. So the first year we got rent $1,600 times 12, because that's months, obviously. So 1,600 times 12, we're looking at 16,000, 17,200, 18,800, 18,800 in rental income for the year. So he's not paying anything to own the home, right? So if you're renting $1,600 plus utilities and whatnot, the only thing he's really going to be paying is property tax. But for this example, we'll just make that obsolete, just for number's sake and whatnot, guys. So 18,800 cash flow, and that's going to be every year that he keeps renting that home out, right? So every year he's going to get, let's just assume the rent stays the same over time, you're going to increase the rent, obviously. But for the first year, 18,800 cash flow. So we're looking at, I'm just going to write a plus sign here. So we're looking at plus that. So already right there, we're almost at a 10% return just off nothing. So the next thing, the great thing about real estate is you can depreciate the house against your income. So for this, it's in Canada where I live, it's 10% for 10 years. In the States, it's 5% for 20 years. But we're just going to stick with Canada because that's where I live. So 10% of 200,000 is 20 grand. So you're going to be able to deduct 20 grand against your income. So 20 grand times 0.3, 20,000 times 0.3, because that's the 30% tax bracket, guys. And with a deduction, you deduct that against your income, and then your income tax bracket, 30% that this person is in, is going to be refund to you. So 6,000. So also plus 6,000. So we're looking at a tax break of $6,000, and that's going to be for the next 10 years. So for the next 10 years, you're looking at 60 grand, guys. But for the first year, we're looking at 18,800 rent, 6,000 tax break, and you're also going to be looking at appreciation of the house. So usually real estate's right around like 4 or 5% on the year. I mean, in hot markets, it can be a lot more, no doubt. But let's just stick with 5% for now, guys. So we're looking at 200,000 times 0.05, and that's looking at we're looking at 210,000, guys. So 210,000. So this year scenario number one, the first year 1, you're up, you got 28,800 and you're up 34,800, guys. So the first year you're up 34,800, which is right around, that's almost 20%, guys. It's like 17.5%. Almost checks out to 17.5%. So you're up 17.5%, guys, and that's a pretty good return, guys. I mean, a lot of people, whatnot. Obviously, Warren Buffett, there's some exceptions. They average over 30% their whole life, but let's be honest, the average investor in the market, maybe they're not going to get 17.5%. I'm not saying that's not attainable. Never try for that in the market. But yeah, 17.5% in your first year of real estate investing, and that's almost guaranteed, guys, because if you have a quality renter, I mean, you could easily be renting a $200,000 home if the rental market's hot for $2,000 easy. Then you're already up another 6, 7, like 8,000, guys, on the year. So it's really, it depends on your scenario, but I kind of kept it cheaper. Also, if you're in a higher tax bracket, let's say 40%, because your income's high, you're also going to be getting a greater tax return. So that's also going to boost your percent. You could realistically be close to 30%. And if the real estate market's a little hotter, you could also, your house could be 220 after the first year. It could be up 10% if it's a really hot real estate market. So we're looking at like 30-40% in your first year, guys. That's ridiculous. But I just kept it lower for now, like average. So we're talking 17.5% if you buy the house cash in your first year, guys. So for me, that's pretty hard to beat. Like I said, not every investor is going to be able to just knock out 17.5%. And the reason why I like real estate too is there's not a lot of times where, like, if you have a solid renter and he wants to rent long term, let's say you have 200,000 in a stock market portfolio and the market loses 50, let's say not 50, let's say like 30% of its value. Well, your stock's probably not going to do too great, depending on what I mean. Obviously, if you picked a winner, you could obviously be up. But let's say you own an index fund, it's also going to drop 30%. So now you're down $60,000. So now you're only at 140. But real estate, if you have a solid renter, instead of $200,000 in the market, $200,000 in a home, you're up 17.5%. But the difference is you would be at 140 opposed to 240,000. So that's the first scenario, guys. We're gonna run into another scenario. So when you real estate invest, I'm sure if you guys know about it, but if you don't know about it, it requires for you to have at least 20% down on a home. So if you on your second home, so if you want to rent out your basement, obviously, like, you don't need to put 20% down if you're going to be living in that house as your primary house. But we're talking about a second property. So this is let's say it's your second property. You need to have at least 20% down. So in this case, he's only going to put $40,000 down. $40,000 down cash. So in this case, $40,000 he's only putting out. And let's say the mortgage is in plus property tax works out to be like let's say like $1,200 a month, for numbers sake, guys. Just make it round numbers. So $1,200 a month. So we're still talking $400 a month cash flow. So 400 times 12 was $4,800 on the year rental income. So right there, right away, like the last example, he only put $40,000 into the house, and he's not paying for the mortgage because he's renting it for more than the mortgage. So he's still in everything associated with the home. Like I said, the home's perfect. In this case, it doesn't need any renovations or anything. It's just ready to rent. So we're talking $4,800 cash flow. That's already up over 10% on the year. That's closer to 13%, guys. We're talking $4,800 rental income. And also, the thing is with real estate is now that you own this home, technically, you don't have to own it fully to deduct the full amount off your income. So this person in this case, he's gonna get that the $20,000 deduction times 0.3 times 0.30 for the tax bracket, and it also works out to be $6,000. So in this case, we're looking at $6,000 for the next 10 years, as I said in the last example. So in this example, we're already at $10,800. That's up already over 25% in your first year, guys. And then also, you're gonna get the property appreciation, but obviously he doesn't fully own that home yet, so he's not going to be able to recognize that full appreciation, guys. So, but yeah, if he did, let's say he did sell the home worth $210, he has 40 grand. Like, let's say it was up 5% again. The home was $210,000 in value. He has $40,000 in it, so he sold it for $210. He's gonna net right around, what were you gonna say here? He's gonna net $170,000, right? So in this case, we don't really need to factor that in as much. But in this case, guys, he's already up $10,800, and that's over 25%. So in this case, it's even higher than the first case. So he's looking at 25% in the year, guys. And like I said in the last example, 17.5%. It's kind of hard to guarantee in the stock market. Obviously, like I said, if you pick a winner, you could easily crush 25% in the market. But let's be realistic, 25% is a great investment. And I think for people that are a little hesitant in investing in real estate, I think it's well, the reason why I think real estate's better than stocks is the financial world's always been a little like confusing for many people, but I don't think houses are. Everyone owns a home. So I don't think the process of buying a home and renting it to someone that you may know is that complicated, right? It's not as complicated. Obviously, there's paperwork and like legalities and whatnot you have to follow, but it's not as complicated. You don't see a ton of numbers in people's minds to start getting lost, right? So in this case, there you go, guys. So we're talking over 25%. And then the third example, and this is what I like about real estate investing is, and this one is going to be a third example, but it's really not so much of buying another property. Let's just say in this case, so this third example, this is only for the two examples. But for this example, let's just say the person that owns their own home is paying, let's say they're paying, let's say it's a $1,600 a month mortgage, which is a fair amount, right? So we're talking $1,600 a month mortgage. But let's say you have a basement. Let's say you have a basement, right, guys? And this one isn't so much about investing. This one's just going to be to prove why real estate's pretty good and how it can also benefit your life in other ways other than just investing. So let's say you don't use your basement, right? And you rent out your basement. Say it's a fair-sized basement. It's like 2 or 3 bedrooms, and you rent it out for like $1,400 a month. So now you're essentially only paying $200 a month to own your home, guys. So this person's paying $2,400 on the year, but he's still accumulating equity in his home. So as if he was paying that full $1,600, because just the person that's living beneath him is paying essentially almost all his mortgage. So that's what I think real estate's really powerful, guys. Like I said in the 2 first examples, the tax breaks they provide is the best tax break out there, guys. Investing in stocks and whatnot, you can get some tax breaks, like especially if it's agricultural and whatnot, but you're not going to get real estate tax breaks. You're not going to get 10% for 10 years, guys. That's a really good tax break. Also, the rental income factor. Even in the other example, we were talking $400 a month of rental income. That's substantial. That could be paying for your car payment. Say you love cars and you know your car is like $500-600 a month. Well, now your car payment's almost full because you put $40,000 to use, guys. So I think with real estate, like I said, it's just less confusing for people. And it's not that I'm saying real estate's the best, better than the stock market. I'm just trying to prove that real estate can be good for a lot of people, you know, that are looking at alternative investing opportunities, guys. So it's not just the stock market, it's not just funds, bonds, whatnot. There's other things you can do with your money, and I personally like real estate. I'm definitely going to do it. I actually haven't started yet, but I'm going to do it in the future. I plan to do a mix of both. So yeah, guys, I hope you enjoyed this video, and I hope you took something of value. And also, if I missed something about real estate investing that you think that I would think is really good, please leave it in the comment section below. And also, if you like this video, please leave a thumbs up and also subscribe to the channel. Thank you guys for watching, and have a great day.